Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the top stocks that were in play today. First up is ticker symbol AMD. Huge move today, closed up 7%. You can see RSI has been pushing up here, currently at 85. Got Fasto at 99. Currently EMA's 4 and 8 support have been holding. That's the pink and green lines. As long as those levels are holding, it signals more upside potential. Okay, so you can see here the last couple times that EMA 4 and 8 support broke, the share price pulled back to the dotted purple line. That's the middle Bollinger Band, currently at 24.80. That's the downside risk if it drops below that basically 28.80 support level. Right now EMA 4 at 33 support's been holding, and the signal has been to keep riding. Now you'll be able to see when the chart is breaking down by watching this 15-minute chart. As you can see here, the candles are above the EMA's 4 and 8, the pink and lime lines. Once there's a drop below that middle Bollinger Band at 31.39, that's where you could that's where the chart could start cooling down, and it could come down and test this 50 simple moving average, similar to how that was tested earlier today. When that level breaks, currently at 30.50, that's where the chart could pull back. That's where you could get some consolidation, possibly test these lower moving averages. Okay, let's look at Apple here. So Apple, had that pullback and then bounced off of the middle Bollinger Band yesterday. Everybody was amped up for today's product launch, and closing down 1% today. I mean, I would have to say that that's a dud. I mean, if it was really if everything went great, you would think it would be up today and pushing higher. So it did not, and right now Apple is testing a very key support zone. It's testing that middle Bollinger Band, currently at 219.73. That's this dotted purple line here. Okay, you could see it held here when it was tested earlier in the week. It held back here in July. The 50-day simple moving average was right below, and it was able to bounce right off of that level. You could see when it broke below in June, below the dotted purple line, it retraced back to that 50-day simple moving average. Okay, so the risk here is if this 219.73 middle Bollinger Band level breaks, what could happen is it could come down here and test this lower Bollinger Band at 209.80, or possibly even drop down to that 50-day simple moving average at 205. And so that is the downside risk on a drop below 219. In order to head higher, it's going to have to break this basically 228 resistance zone. Okay, if you look at Apple here on the basic chart, just the EMA's 4 and 8 with the Bollinger Bands, you could see here there was a volume spike today, and so that is not what you want to see on a down day. You could see volume, it was a larger day than the previous day, so yeah, that is a red flag on a down day. And then right now, in my mind, there's two levels to watch tomorrow, and it's just to make round even numbers. It's all about breaking this 222 level. That's the EMA's 4 and 8, which is this lined up with this 221.87 level, and then the middle Bollinger Band at 219.73. Those are the two levels. So I'm calling it 222 and 220. And so basically, if Apple is trading above 222, that's going to be your easy signal that, okay, yeah, it is bullish, it's bouncing, it's heading higher. Now, if it trades below 220, that's going to be a red flag. If it gets below 219.75, below this middle Bollinger Band level, that's where you're going to realize, okay, yeah, this is not working out. The bears are taking over. It is pulling back. And that's where you can see this 216 to 218 support level tested. Okay, yeah, so let's look here at Apple on the 15-minute chart, and you can see it made a top, and then it pulled back, and it found support down here at 220, and then it came back up, and it's been failing to break this 224 resistance level. That's lined up with this red line right here. That's the 200 simple moving average on the 15-minute charts. It's currently at 223.93. This formed an intraday double top, and then it pulled back. It had an ascending support line going. You could see ascending support, and then that broke on this candle here at 2 o'clock today. It also broke below the green line, which is the 50 simple moving average. That level needed to hold. It came down and bounced off of the 220 support, but when it came back up and hit the green line, line, it failed to break that level. You can see it turned into resistance, the 50 simple moving average. So now it's below both those levels. So going forward, if Apple's unable to break 222 and get above that 50 simple moving average, that's a clear signal that the bears are taking control. And then if you see it drop below 220, that's going to be the signal of downside risk, and it could come down here, test these lower levels. Now to the upside, if it breaks out above 224, that should be your clear signal that Apple wants to head higher, and that is the top moving average on this chart. So trading above 224 would be the clear signal that the bulls are clearly in charge. Okay, let's take a look at Netflix here. This was the alert from last Thursday when it was bouncing off of support. It formed bullish hair me. It had an analyst upgrade. You can see here it was on Thursday the 6th. It was bouncing off of the middle Bollinger Band. That's the dotted purple line at 347. It needed to get above that gold line. That was the 100-day simple moving average at 355. And then you can see here on the 15-minute chart that was back here on the 6th, was back over here, and it was trying to get above the green line, the 50 simple moving average. That happened on the 7th. It was working on it. What happened was it basically formed this sideways channel. It had horizontal resistance right here, and you could see that level was tough to break. That was around 355 basically, and it started breaking into the close yesterday, and then today there was a gap up open above that level and above that blue line, which is the 300 simple moving average. That was the top moving average on this 15-minute chart, and then that was your clear signal. Okay, Netflix is finally breaking out higher, and it closed really strong today. It did pull back a little bit, and after hours trading, it was down about $1, putting it down here around 368.95. But it was a very, very bullish move, and yeah, Netflix now is rocking out. It closed today above the 100 and 200-day simple moving averages. What looks interesting to me, real quick, if you look up here, RSI is only at 58.91. Okay, so when Netflix gets pushing, you can see it runs up to levels up here in the 80s. Okay, this is 90 up here. So being at 58, what that does is it shows that there is a lot of room to run. Okay, there's a lot of juice in the tank, and so there's a lot of space between this line and that line, and so now you have Fasto back above 80. That's a signal the bulls are heating up, and you had a bullish crossover today on ADX. Check out how the blue or the green line crossed above the red and black lines. That's a clear signal the bulls are taking control. Now the green line just needs to stay above both those levels, and that'll be a good sign that Netflix wants to head higher. Now today, like I said, there was a break above this gold line here and above the green line. That's the 150-day simple moving averages. Really good move. Last time it broke above those levels, you could see back here on this white candle here and this red candle, it broke above at the end of August and failed to hold and dropped back below. So now what we're looking for is a break above that August high close there, basically 370. If it breaks above 370, the upside potential here is it runs up to the bottom of the gap at 385. There's a gap over here between the bottom of this candle and the top of this candle, and so basically 385 is the target on a break above 370. Now if it ran up here to around 392, that would fill the gap. Now to the downside, and then also I just want to point out it did break above this descending resistance line, and so that's bullish as well. It needs to stay above those levels. Basically on a pullback, it has to hold that 50-day simple moving average at 361. A drop below 361 would be a red flag signaling more consolidation. Okay, take a look at Alibaba. Yeah, so Alibaba came down and it filled the gap. This is a chart that we've been working on, and so it came down here and it filled this gap, and then it dropped lower, and so it did end up coming down to near this next support zone in the 150s, and then it came back up and ended up penetrating back into that gap level. Basically, I'm showing you this chart because there was this unfilled gap, and this green line right here, I should have it red, that is the top of the gap, and so it's going to need to break through that top of the gap resistance level to head higher. Okay, so just keep that in mind. The top of the gap is always a tough level to break. It's similar to a 200 or 300-day simple moving average. It can be tough, and once it does, it needs to stay above that level. Now this is the BIOAQ weekly chart. And we had a target on here for this 100-day simple moving average. As you can see down here, it was going to put it on deck. And we've been discussing this in the chat. And then if it breaks, shoot for 152, and that was that 100-day simple moving average. And you could see the low was 152.85. So yeah, so congrats to everybody that was following the TA, the technical analysis, and did get a load off of that 100-day simple moving average. That was the reload level. It looked like the target. Now that needs to hold. If it were to drop below 153, that's going to signal more downside risk. That's a must-hold level. So now that the trade was, loading off this 152, 153 support zone off of that 100-week moving average, and then the bounce play is back up to that EMA 4 at 167. If it fails to break EMA 4, that's going to be the lock and gain zone on the bounce. Okay, so let's look at Baba here on the daily chart. So yeah, so really nice move today on the daily chart. This is actually the move that we've been looking for. And I just want to show you, you've got RSI now above 30, Fasto above 20, and plus DI is hooking up with minus DI hooking down. So the chart's heating up. What happened was there was a close today above EMA 4. That's the pink line currently at 160.42. It has to stay above that level. If that holds, it's about breaking this 163, 164.50 level. That's EMA's 8 and the 400-day simple moving average. If it can get through there and through EMA 13 here, 166, there's a gap back here at the beginning of September, and so look for a potential gap fill and a run up to 170. That is if it holds EMA 4. If it drops below EMA 4, that's going to signal more downside risk. That's a must-hold level. Okay, take a look at FCX. Yeah, this bounced today. So there's talks that the U.S. and China are going to resume some trade talks, and so that's people are assuming then that means that there won't be tariffs coming anytime soon, that the 200 and 260 billion in new tariffs are going to be on the back burner until they have a meeting. At least that's how I read that the markets were reading it. And so so some of the stocks that were getting beat up on the China tariffs, they were getting a bounce today, and so FCX is one of them. There was some heavy call option buying for the 1350 strike price, and so yeah, today it closed above that strike price at 1363, and it closed above EMA's 4 and 8. It's going to be all about staying above EMA 8 at 1354. You want to see it stay above that 1350 level. If it dropped below EMA 4 at 1340, that's going to be a major red flag signaling downside risk. As you can see here, the play, ever since the middle Bollinger Band support broke over here, it has been to be short FCX as it's been dropping lower. And so what it needs to do is break this downtrend and get a new uptrend going. And to do that, it's going to have to break through this middle Bollinger Band here and above this descending resistance line. That's the top of this channel. And so it's working its way back up to the top of the channel. That's basically between $14 and $14.25. If you see it trading at $14.25 and above, that should be a real clear signal that it wants to head higher. Basically, if it just closes above that middle Bollinger Band at $13.95, that's going to be a major bullish change in trend, signaling the possible start of a new uptrend. So keep an eye on FCX. Let's look at OGEN here. Closed up nearly 9%. So nice move. The chart's heating up. Look for RSI to get above 50. Fasto's above 50. You got a bullish crossover on ADX. And so this did close above the middle Bollinger Band yesterday. The dotted purple line, that was your signal. The chart was heating up. As you can see, there hadn't been a close above that level since way back here on the 26th of June. And so all of these candles are below the dotted purple line until yesterday. So that was your clue. It was heating up, and then look, boom, huge volume today. That's why we follow these types of patterns, because that's it leads to days like today where you get a big boom. It wasn't a giant gain, but it was at higher levels earlier in the day and pulled back. What that did, I guess I didn't show accumulation and distribution, but the bottom line now for this chart is it just has to stay above that middle Bollinger Band at 43. That's the stop loss level. If it were to drop below that level, that would signal downside risk. It needs to break through the top of the two channels here, the two key levels above this 52 level or so, and then this 60 to 63 level. It's all about working its way back up to this 50-day simple moving average at 63. It has to bust through that upper Bollinger Band at 48 to head higher. Okay, take a look at INPX, closed up 68% today. Very nice move. It's heating up. It did have a big gap up open today, so that is the red flag. If it does stall out and start to pull back, the downside risk is it pulls back to 14 and fills the gap. Okay, today there was a close above that green line. That's the 50-day simple moving average. You'd have to go off this chart to find the last close above that level. There was a close right at that level at the start of September. That was your clue. The chart was heating up, and then today, boom, big move higher. It's unfortunate there's an unfilled gap, because for penny stocks, gaps usually get filled. But we'll see if it can keep pushing higher. It's all about holding EMA 4 at 16 cents, staying above the top of this previous level at about 18 cents here and above this previous close, and then it has to break this gold line. That's the 100-day simple moving average. Trading above 24 would be really bullish. You have this 29 level, and then this previous support up here just above will be the next resistance zone. If it were to bust through all these levels, there is a gap back here in April, and so the gap level is way up here in this, what is that, 43 to 47 level, something like that. So keep that in mind on a breakout higher. There was huge volume behind the move today. Okay, take a look at NSPR here. So heating up as well. You have RSI at 62, Fasto at 87. You have a bullish crossover here in ADX. This is heating up. There was a close today above that green line. That's the 50-day simple moving average. Once again, you have to go off this chart to find the last close above the 50-day simple moving average. Look how tight those Bollinger Bands were. There was this really super tight channel here, and then boom, breakout higher. So that does signal more upside potential. It also closed above this resistance level here. That was a key level, this 25 level. It's the key now is stay above that 25 level and then keep pushing higher. Up here in the 40s to 50s is going to be the next target if it can stay above 25. There was huge volume behind the move here, so that is very bullish. Okay, so there are gold stocks are in play right now. So keep an eye on gold. We have gold mining stocks that are starting to move. The gold mining penny stocks up 17% here for LODE, LODE. It did have that long upper wick here on the candle. That did lower Fasto and or lowered accumulation distribution and shaken money flow. Yeah, but there was this giant volume spike. Just keep an eye on LODE. It's above the middle Bollinger Band at 16 cents. If it can hold that level, it could possibly get a new uptrend going. The 50-day simple moving average is at 19 is the key level to break. It hit that level and broke it temporarily and then pulled back. If it can close above that level and turn into support, that's when it can head higher. Keep an eye on NGD here. It's heating up as well. You could see here today it closed just above the dotted purple line. That's the middle Bollinger Band, currently at 95. If that level holds and turns into support, a new uptrend could begin. Look for a run up here to that upper Bollinger Band at 113. If it can bust through that, you've got the 50-day simple moving average at 136. Notice the nice volume spike behind the move today. So yeah, keep an eye on NGD. And one more gold mining penny stock to keep an eye on. Take a look at TRX here. It's heating up. It closed today above all the moving averages. Notice how, well, not all, I guess. I'm sorry. There's one more to break. It's up here. But we were watching this today, looking for a possible close above the convergence of these moving averages. You had the 300, the 200, the 50, and the 400-day moving averages all between 39 and 42. So that 43 close was above resistance. And so now the next target is the 100-day simple moving average at 47. That'll be the next key level to break. If it can break above that level and turn into support, you have the 50 level will be on deck. That was the high close from back in July and will be the next target. It looks like it's yeah, just about 50 right there. Okay, so yeah, keep an eye on the gold stocks. Okay, let's look at RHE here. Yeah, it was up 34% today, but it did form that dreaded black candle. I mean, that's pretty nasty if you you know, bought at the open and you know, near high of day, or you tried to catch the falling knife. It just broke through everything. It was above the 200, the 100, and the 50-day simple moving averages, and it closed back below all of them. Notice the upper Bollinger Band is still way down here at 16.6, so the candles are working back into the bands. There's an unfilled gap. If it comes down here to 15, it will fill the gap. Look for a technical bounce off this 15 to 14 level. Okay, so you could get a technical bounce, but when I see the black candle form like this, especially when it's a gap up open above the upper Bollinger Band, that's a signal to lock in gains or just avoid the stock. People, it's just so hard for it's just unfortunate. People lose money on this every day, and I hate to see it. And so just don't become a victim. Avoid the black candle. A black candle forms when a stock is up on the day, but it's trading below the open. It's a bull trap. It's where even though it's up, the bears are actually in control. Okay, take a look at BIOAQ. I'm going to leave you with this. Yeah, nice move today. It closed up 62%. It was pushing into the close. It has a nice uptrend going right now. It closed today above that green line. That's the 50-day simple moving average. It needs to stay above that level, basically 0.033. Stay above 3.3. That signals more upside potential. Right now, it's filling the gap. There's a gap to up here to the bottom of this candle, which is right about 6.5, just below 6.4. That will be the big level to break when or if it's tested. Okay, so if it does pull back, it needs to stay above 3.3. If it were to drop below that level, that would signal downside risk. The gap is between the top of this candle and the bottom of this candle. It's been working on filling it. It has a nice uptrend going. As long as, right now it has to stay above that 50-day simple moving average. That's your stop loss level. Okay, and look for potential gap filling here. The 15-minute chart was super strong into the close. You could see it was riding the EMA for support. It has to keep making new high closes. That's where you can, where you'll see if it's cooling down or not, is if it quits making high closes on the intraday charts. I like to use that 15-minute chart. If it can close above 4.7, and that's going to signal it's still heading higher. If it fails to close above 4.7 and it drops below 4.1, that's going to signal downside risk. Okay, so yeah, keep an eye on BIOAQ, and keep in mind too that many times gap fill is a climax event. It has to break through the top of the gap and then stay above that level for it to head higher. If it breaks above and then drops back below, that is a lock and gain signal. If it hits that level and fails to break, that's also a lock and gain signal. All right, thanks for viewing this video.